of the proper trading with the appropriate signals and patterns. We got Mike Rixey here from NetPicks to show or demonstrate his methods for successful option trading. So with that, Mike, I'm going to let you come on and show us what you've got. Welcome to the Candlestick Forum.
All right. Thank you very much, Steve. I appreciate the opportunity to come speak to your people here tonight. I just want to welcome everybody. I want to thank you for joining us. I know we're heading into the long 3-day weekend, and everybody's probably looking forward to getting away from the markets here for a few days. So I'll move through pretty quickly here tonight. Make sure you have plenty of time to get over and watch the rest of the basketball games if you're here in the U.S. interested in the basketball games on this weekend. So let me get my charts up. Hopefully my charts are showing at this point. So the topic tonight is 100% returns. Is it possible with options trading? Okay, if you're like me, you get emails on a daily basis from different marketers promoting very nice returns with options in very short amounts of time. But is it realistic? Okay, it's really easy to put together marketing material that sounds great, it looks great, but can you profit from it? Okay, so we're going to dive in and we're going to talk about that in more detail here tonight. So before I jump into the material, let me just give you a little bit of background info on myself so you know who the heck you're talking to here tonight. I'm a trading coach for NetPicks. NetPicks designs custom trading systems for traders. That's the first part of the business. The second part of the business is we provide educational material to traders aspiring to become full-time successful traders. So I've been a coach for NetPicks for about 6 years now. I really enjoy working with traders on a regular basis. I learned so much from working with people throughout the day. Could I trade by myself every day? I could, but it's really nice to have that interaction with people. So I got my start back in college, back in 2002. So yes, I am a youngin', but I was a finance major at the time. I was doing a stock market project, really my first exposure to the markets. And it was during that semester-long project that I really started to get intrigued with the idea of making money in the markets. Okay, I was learning a lot of neat concepts, but the problem that I ran into as a poor college student, I had no money to work with. I had no money to benefit from all this book knowledge that I was learning about. So as I dug deeper in, I was determined to find a way that I could profit from that material, and that's when I stumbled across the options market. Okay, and for me as a poor college student, it was a perfect opportunity. Here I saw a product that I could benefit from moves in the market with a very small account size. So originally my approach was trading around earnings releases. Okay, I found some early success. Unfortunately, I had success early on. The reason I say that is it created some bad habits. I was really just trading off of a hunch. I was trading off of advice from other traders. The problem with earnings, as most of you know, you can see some pretty large moves overnight. Okay, it's basically throw your bets on the table, fingers crossed, hope it works out. But for me, with very little knowledge of how those moves take place and how to benefit from them, I ended up giving up all my profit and then some. That might sound familiar to some of you here tonight. So I knew I had to do something to become more serious with my trading approach. And it was a few months later that I had the opportunity to go down on the floor of the Chicago Board Options Exchange for some training. Unfortunately, I don't believe they allow you to do that anymore just for security reasons. But it was fascinating for me because I got to see how professional traders work and think throughout the day. And what I noticed was that their approach was so different than mine. Okay, when you talk to a professional floor trader, they're thinking 4 or 5 steps ahead. Okay, they might have 50 different positions on, and they can tell you what their risk is at any point in time. Okay, they know exactly what they're doing before they even put a position on. Whereas in my spot, I was just trading off of a hunch, throwing my money out and hoping it worked. Okay, so I really left that experience realizing that I had a lot of work to do. So I devoted the next several years to learning anything and everything about the options world. Okay, back when I started, there wasn't the vast number of products out there, educational products that taught you about the market. So it was basically all self-taught. Fortunately, I had some mentors along the way that came alongside me and helped me out. But for the most part, it was basically the school of hard knocks for me. So along the way, I discovered NetPicks. From my experience on the floor, I realized quickly that I needed a very specific system that I could trade consistently day in and day out. And what really clicked for me was the NetPicks systems were very clear-cut. They really, it's not a system where you log in, you're looking at 50 different indicators, the charts are all cloudy. That's not it at all. These are very straightforward systems, and it really fit my trading style, and it really filled the void that I had in my trading. So after becoming a long-term customer, I was invited to come on board their team, their training team, and I've been working with traders on a weekly basis ever since. I work with dozens of traders every week, really training them how to avoid the mistakes that I made there during the first couple of years of my trading experience. So I do day trade as well. I do day trade for a couple hours a day when I can, but for the most part, my experience, my preferred way of trading is with options. In fact, if you were to force me to pick one style of trading for the rest of my life, for the rest of my career, it's going to be with options. Hands down, you're not going to be able to change my mind. That's my favorite way of trading, and we're going to talk a little bit more about why that is here tonight. So if you have any questions as I work through the material, feel free to post it in the text. I'll do my best to work through those as they come up. So my first question that I'm going to pose to you tonight is, how are you finding your trades? Okay, it looks like Steve's got a great program going here with the candlestick trading forum. It's a great method. There's some great tools to use there. But I'm going to ask you to be honest with me here. How many of you will let different outside influences, like the ones that I've listed here on the screen, influence your trading decisions? Okay, a lot of times when I work with traders, one of the first questions that I ask them is, how are you taking your trades? Do you have a system in place? And so frequently I get the answer from people that, I look at the Wall Street Journal, I look at the Investor's Business Daily, I watch CNBC and Bloomberg. They're all great. They're great for what they are, and they're pure entertainment. The reason I say that, if you're basing your trading decisions off of an outside influence, whether it be the media outlets here on the screen or another trader, the problem with that is you don't know what's behind their research. Okay, if you pick up a copy of the Wall Street Journal here over the weekend, are you going to be able to open that up and find exact entry points and exact exit points? You're not. If you watch CNBC throughout the day, are you going to find exact entry points and exit points? Absolutely not. You're going to have traders on there and different analysts on there with an agenda, but if you're letting that influence your trading, you're making a mistake. So what I'd rather have you do, and hopefully you all are working with Steve on a regular basis, hopefully you've got that system in place. Okay, and we're going to talk about that in detail here before I get into some of the specific options trades that I've taken here recently. After working with the hundreds and probably even thousands of traders here over the years, I've really boiled down my steps for trading successfully to 3. Okay, and step number 1 is having a system in place with exact entry points and exit points. Okay, it seems pretty basic. Some of you might be looking at that and saying, oh, gosh, Mike, I hope you brought more than that here tonight. That seems very elementary. The problem that I see in working with traders day in and day out is they overlook all 3 of these steps, especially number 1. Okay, they have a lot of knowledge. Okay, you can teach different chart patterns and you can teach different strategies for them to use, but if you don't have a system in place telling you exactly where to get in and where to get out, the emotional aspect of trading is going to start to creep in, and you're going to find it very difficult to see success. You might see some hot stretches from time to time, but to see that consistent long-term success, it's going to be pretty difficult. So I'm going to show you just a sample system that I use here in a bit. I'm not trying to sell you anything here tonight. I'm just trying to show you how I trade personally day in and day out. Step number 2, have a watch list of products that can be traded consistently. Key here is to diversify. Okay, a lot of traders that I work with, they're scanning hundreds or even thousands of stocks on a daily basis. The problem that I see with that, especially on the options side of things, is you're going to be trading products that you're not familiar with. Okay, if you pull up a stock based on a scan looking for a specific chart pattern, you might find some great candidates, but when you go to look at the options, are you familiar with the volatility levels? Are you familiar with how long do you anticipate being in the trade for? What's an average holding time on that stock? There's a lot of factors that go into play on the option side that you need to be familiar with. So my preferred method is to establish a watch list of names that you're trading consistently. There's some names on my watch list that I've traded for years now. Apple, for example. I could trade Apple in my sleep. Okay? But it's really important for me to understand that product inside and out so I can be very familiar with how those options trade. Step number 3, have a very specific trade plan in place before getting into a setup. Okay, this is different than step number 1. What I'm talking about here is before you even get into a trade, how much of your account are you going to risk per trade? When you're in that position, how are you going to manage your stop? When are you going to get out? Okay, I talk to traders constantly that struggle with this because they're trading off of a hunch. Okay, we all have opinions on what we think the market's going to do. Okay, if you were to ask me what I think the next move is going to be, I think we're going to move to the downside. I think we're overdone on the upside. That doesn't mean the market can't keep going higher for the next couple of months. Okay, I can't trade based on what I think the market's going to do. I have to trade based on what my system is telling me to do. So if you're looking at these and if you have all 3 of these down pat, if you can sit down in front of me and say, Mike, here's my trade plan. Here's my detailed list of rules. Perfect. I applaud you. You are way ahead of 95% of the traders out there. For those of you that can be honest and look at those 3 and say, hey, you know what, I've got some work to do. I would encourage you, before you put another dime of your hard-earned money on the line, make sure you go through these 3 steps, establish your trade plan, establish your rules before you go any further. Okay? If you were able to see my trade setup right now, my trade desk, I can show you my trade plans for every stock that I trade. Okay, that really gives me a head start when I look to trade on a daily and a weekly basis, because I already have a lot of the hard lifting done, which I'm gonna revisit here in just a few minutes. Okay, so let me just bring up a chart and let me kind of walk you through what I'm talking about. Okay, I've been pulling up a chart of Google, and this is one of the NetPicks systems that I use. And the first thing that should jump out at you are these plus signs here, the white dots and the red dots. Okay, we're looking at my entry points, which are the plus signs, my targets, which are the white dots, and the stops, which are the red dots. Okay, what this does, it takes a lot of the guesswork out for me. Okay, I'm not spending hours on end analyzing different formations and trying to find the next best candidate to look at. It's not necessary because I'm trading the same stocks day in, day out on a weekly basis. I'm really familiar with how they move, and I've programmed all of my system rules into my calculator. So when I come in throughout the day and check on each individual chart that I look at, is it going to take a long time for me to make calculations in my head on Google? No, everything's laid out for me. It's telling me exactly where to get in and where to get out. This is where I think a lot of retail traders go wrong because they don't have that system in place. They're paying attention to 10 different traders trying to combine all 10 different opinions into a way of being involved in the markets. And it's really difficult to see success like that. So I'm not saying that this system is the end-all be-all. I'm not saying this is the only system that you should use. Okay, you might have your own method of trading, your own system that you've created. You might be using some of Steve's material. Regardless of what you're doing, you have to make sure that you have exact rules in place. You have exact entry points on your chart, exact exit points. So you really eliminate a lot of the emotional aspect of trading, which we all struggle with. I don't care how long you've been involved in the markets, the emotional aspect of trading is something we all have to deal with on a regular basis. So one of the big problems that I hear from traders, when I tell them, and I really discourage them from scanning hundreds and even thousands of stocks on a nightly basis, my reason being is I really want them to specialize in a handful of products. But they always throw the question back to me, is how do I narrow that list down? Okay, how do I find the best candidates to trade long term? Well, I've really come up with some different ways of doing that myself, and we're going to walk through that here over the next few minutes. Number one, make sure to stay diversified. Okay, key point being, I don't care how many names you look at. For me personally, I trade full-time for a living. Okay, I have 17 names on my watch list right now. Okay, I'm not looking at 50 different names. I'm not scanning hundreds of stocks on a nightly basis. I'm trading these same names on a regular basis. Okay, it really takes a lot of the guesswork out for me. Now, you don't have to look at 17 names. You could look at 3 to 5 names. You can make a very good living trading 3 to 5 names on a regular basis. Okay, regardless of the number of names you can look at, make sure you're diversified. If you're only looking for 3 names, do I want you to trade Apple, Google, and Priceline? No, I'd rather have you get diversified within those 3 names. Okay, try to get a tech name, an energy name, and a financial. I just listed some of the key sectors that I like to have exposure to. Okay, get a good mix of stocks and ETFs. Okay, I love ETFs at certain points of the year. For example, we're heading into earnings season. I'm not a big fan of earnings season. Okay, when we can close the day before at a specific level, and we can open up or down 5 or 10% the next morning, I think that's very difficult to trade. Okay, for my system, for any trade, for any stock to get on my watch list, it has to win 65% of the time. Okay, a lot of stocks perform better than that, but that's my minimum performance level that I have to see. So if I know that my system gives me an edge, and I'm winning 65% of the time, why do I want to throw that edge out the window and trade earnings that could go either way? Okay, earnings could do exactly what you expect them to do, and the stock could go in the opposite direction. Okay, it's way too much of a gamble for me, but that doesn't mean I just sit out earnings season. That's when I really start to transfer from my individual names to the ETFs. Okay, products that I can get overall exposure to whole countries or different sectors. So I'm not overly exposed to one given name. So in the next couple of weeks, that's what I really start to transition into, a lot of the ETFs on my watch list. Not to mention if you're trading the options, I think we all know, if you're involved in the options world, you all know what implied volatility does when you start to approach options. The options get pricey. You have to be familiar with that. You have to have an approach going into that. Okay, trade familiar products. We've already touched on this. Don't pick products based solely on price. Okay, I work with traders all the time that will pick the stocks that they trade solely based on how cheap they are. Okay, I work with a lot of retail traders that have smaller account sizes. I work with a lot of traders with account sizes in between $5,000 and $10,000. And immediately they shy away from Apple because to put a trade on Apple, we're looking at $1,500, $2,000. That's a large portion of their capital tied up in one trade. It's too risky. So they focus on the lower price stocks, which there's some good performance down there. I'm not saying you can't be successful with that. But what I hate to see traders do is eliminate a whole segment of the market just based on stock price, when you can use the options to take advantage of some of those really nice stocks. Okay, what I like to do personally is take advantage of stocks and ETFs that offer weekly and mini options. Okay, I like to pick the names of my stocks based on how active their options are and the types of options that they have available on them. For those of you that are experienced with options, you're probably familiar with the weeklies and the minis, which have just been released here over the past couple of weeks. For those of you that are newer to the options market, basically what I'm talking about here is traditionally, you were limited to the monthly options. Okay, so if I buy a monthly call option that expires every month. Next, they developed the weekly options, which are great products, by the way. I think they're very unique. I like to use them in my own trading, so if you haven't used them up until now, I'd highly recommend that you look more into them. They're great products. A lot of great volume in those products. So the weekly options, obviously, they expire once a week. Great products to look at. I think 2 weeks ago now, if I remember correctly, they came out with mini options on 5 different products. Okay, if you look at a traditional option, if you buy one call option, that's going to give you control of 100 shares of that stock. Okay, with the new mini options, it gives you control of 10 shares instead of 100. Okay, so what that does is it gives the small retail trader the ability to get in at a fraction of the cost. Now, those mini options are available on Apple, Google, Amazon, GLD, which is the gold ETF, and then SPY, which is the ETF tracking the S&P 500. So there's 5 products right there. If you're looking for a watch list of names to trade consistently, I just gave you 5 names that if you have a small retail account, that's a great place to start. Okay, I'm really surprised at how quickly those products are picking up, too. I was anticipating having to give them 6 months or so for the volumes to really pick up, but just in the past 2 weeks, it's been amazing to see how fast traders are picking up on them. So I'm really excited about these for my students that I work with. A lot of them have smaller account sizes, so this is just going to open up a whole new universe of products for them. I really think that these, over the next couple of years, are just going to explode in popularity. So if you're trading options, make sure the options are liquid. I can't stress this enough. Just because a stock has options available on it doesn't mean it's a good candidate. Because a lot of times you're going to look at a stock with very illiquid options. You're going to see very wide bid-ask spreads. So for you to get in and out of a trade quickly, you're going to find that you have to give up too much on the price, that the overall trade costs really add up quickly. So I'd rather focus on those names that have very active options, names like Apple, like Amazon, like Google. I'm not trying to reinvent the wheel here. It's not my goal to go find a stock that no one trades. Okay, I want to be where all the activity is. So we're going to revisit this as I walk through the criteria that I use for my option strategies. That's a big part of what I look for. And finally, don't trade 50 different products. I don't care if you're in here with a 7-figure account. You don't have to track 50 different products. It's not necessary. Okay, I can tell you from personal experience, if you try to track that many names, it's very overwhelming. You're going to find yourself making mistakes. And since I've gone to the approach of tracking anywhere from 12 to 20 names, that's my sweet spot in my own trading style, I've really seen my performance increase because I'm really able to focus in on those 12 to 20 names instead of looking for new candidates on a daily basis. Okay, now how do I establish a trade plan? If I come up with a list of 5 names that I want to look at, how do I come up with a trade plan? I said you need to have very detailed rules that are documented in place. Well, how do you come up with those rules? Okay, if I'm not sitting there or another instructor is not sitting there giving you the rules to follow, how can you do that on your own? I'm a big believer in backtesting. Now, with that being said, I fully realize backtesting does not guarantee future results. But what it does do is it really puts you on the fast track to becoming familiar with that product. Okay, so what I encourage my students to do is to go back at least 6 months on every name that they trade. Document every trade according to their system. All right, whether you're using a spreadsheet, if you're an Excel user, or just an old school notebook with sit down with some paper and a pen and document the trades. What you can do at the end of that test is you can really start to look at the stats. For me, with my trade plan, if I can't back up any rule on my plan with stats, I know I'm not ready to trade that product, or I'm not ready to trade with that rule. I have to prove it to myself before that rule gets onto my trade plan. So what I'm looking for here, after I do my test, I'm looking for winning percentage, I'm looking for winning and losing streaks, I'm looking for my overall profit, and this next one is very key for you options traders. What's your average holding time? If you don't know what your average holding time is on a stock, it's going to make it very difficult for you to put on the proper strategy with the proper expiration cycles and the proper strike prices. This is a big component of my overall options trade plan, which we'll talk about here more in just a second. And finally, different money management methods. Okay, once you're in a trade, let's just use Apple for an example. Okay, I've traded Apple for years. I know that over time, my average holding time on Apple is 3 to 5 days. That's very valuable information as I go forward looking to put on different option strategies. That's a very valuable piece of information. Okay, not only do I know that, but as I start to hit my target levels, I plot 2 different target levels on my chart. As I start to approach that first target, I know based on historic trades, based on past performance, what I should do with my stop once it hits that first target. Okay, that's very valuable information as you go forward. If you don't take this type of an approach with the stocks that you trade, I think you're making a mistake. I think it's really, I think the light bulb will go on. When you start to go through a process like this, this is exactly what happened to me, and that's really when I started to see the success in my trading, was by going through this type of a method. It really started to build confidence. It really started to make me into a disciplined trader, and those are 2 things that a lot of traders struggle with these days: trading with confidence and being disciplined. So once you have that back test done, I really encourage people to keep that going as a forward test. If you're not keeping a trade journal, if you're not logging your trades on a daily basis, I also think you're making a mistake. I think you're missing out on very valuable information going forward. Okay, I have trades documented on Apple going back years, so that when I make trade decisions, every trade decision I make, I should be able to look at you in the face and say, you know what? I'm basing this trade decision based off of this statistic. Okay, I'm a numbers guy. I have to prove it to myself that that rule can be backed up by stats before I even consider getting into a trade. Okay, so why? Okay, if you've got a trade plan in place, if you've got a system in place that gives you high probability setups, why not just trade the stock itself? Well, I could go on and on trying to convince everybody in this room to trade nothing but options going forward. Okay, I'm just gonna kind of pick and choose a few here tonight, just a few of the main ones, which we've already touched on some of them. So number 1, the versatility. We've already touched on this. You have monthlies, weeklies, and minis available to you. Okay, when I talk to a lot of Forex traders, a lot of them love the Forex markets because of how easy it is to control your risk. You can control your position size in Forex very easily because you've got the mini lots, you've got the micro mini lots. Well, now all of a sudden the options market is really starting to catch up. Okay, you can trade the full size monthly contracts, you can trade the weekly contracts, you can trade the mini contracts. That gives you incredible flexibility as a retail trader to control your risk. Next is the popularity. Okay, I love to day trade futures. Over the past couple of years, really over the past year, a lot of my favorite markets have seen a pretty big drop in overall volume. Okay, my daily ranges have really shrunk over the past year. That doesn't mean I can't be profitable. There's a lot of profits to be made there. It's just trickier. It takes more time. Okay, there's one exception. Okay, there's one type of trading that really hasn't seen any drop off in volume, and that's in the options world. Whether it be because they come up with these new products ongoing, I don't know. I just think the retail public is really starting to catch on to these useful trading vehicles that allow them to trade the high-priced stocks for a fraction of the cost. So we continue to break volume records in the options world, which is really good to see. As a trader, I want to see that because it only adds liquidity, allows me to get better fills on my trades. Number 3, the leverage. Okay, let's face it, we're all retail traders here in the room. We don't have access to unlimited funds. I wish we did. Okay, we're not hedge funds, we're not institutional traders, which means we have to be very strategic with how we use our funds. And by using options, it allows us to play on some of the very volatile names, some of the high-priced names at a fraction of the cost. That allows us to get more diversification. It just gets us better use of our capital. Okay, next, the strategies can be used across so many different markets. For those of you that are experienced with options, you know what I'm talking about here. We can benefit in bull markets, bear markets, and the dreaded sideways market. Okay, when we go into the summer months, especially late summer, the markets really die off. Okay, it can be pretty tricky to make money. Well, for me as a full-time trader, I can't go long stretches without making money. I still have bills to pay. So I have to have tools, I have to have strategies available to me that I can make money in all types of market conditions. Well, by trading options, that's the only market available to you that you can benefit from a sideways move. Okay, can you benefit? Can you profit from a sideways move in the Forex markets? Good luck. Can you profit from a sideways move in the futures markets? It's tricky. Okay, in the options game, there's definitely strategies that you can use that really profit from the market doing absolutely nothing. And that's a very important tool to have in your tool belt going forward. And finally, just the diversification factor. We've talked about that already. It's just, I don't care if you're day trading futures or Forex or swing trading futures. I don't care what market you're looking at. Trading options allows you an easy way to get some really good diversification in your trading. And then I saved the best for last. It's the time aspect. Okay, I have zero desire to be chained to my desk all day long. I don't want to trade for 8 hours a day. I have no desire to do that. Okay, I just don't think it's necessary to stare at every tick throughout the day. Well, by trading options, it allows me to be involved in the markets with very little time commitment. Okay, we're going to take a look at a few trades here next. On average, I look at my swing trading charts 20 minutes a day or less. Okay, does that sound appealing to anybody? I mean, yes, initially when you first get involved in the markets, everybody just wants to trade all day long. That wears off pretty quickly. Okay, what I'd rather do, at NetPicks we call it lifestyle trading. We want to get in and out as quickly as possible. If we can get in on a day trading basis and get a couple of winners, we're good to go. We're going to call it quits. On a swing trading basis, if I can get in and out in less than 20 minutes a day, that's what I'm shooting for. I don't want to be tied down to my desk all day long. That was a big selling point for me becoming a trader. I don't want to be stuck in a cubicle all day. That does not appeal to me. What does appeal to me is my daily routine. And this is what I typically do each and every day. I like to come in before the open. Okay, I like to look at the futures. I like to look at the pre-market action. Are we going to gap up? Are we going to gap down? I like to go through each individual chart as well. Try to form a plan for the day. Okay, I just got done showing you a chart of Google here earlier, which we're going to revisit in a second. But when you have a trade already outlined for you before you even get in, it eliminates a lot of the research time for me. I'm able to get in and check all the charts before the open in 10 to 15 minutes. In 10 to 15 minutes, I can analyze all 17 of my charts and come up with a plan for the day. Then I move on. Okay, I like to be there for the open. Granted, I'm also day trading at that time, so it's a pretty easy addition just to look at my swing trading charts. But we all know the market can be pretty active right at the open, so I want to make sure I'm there at that time just to place any new trades. If I need to make any adjustments on trades, I will do so at that time. Then the rest of the day, I'm just coming in periodically. Okay, I typically come in for 2 to 3 minutes at a time the rest of the day. And here's how I'm able to do it. Okay, I'm a TradeStation user. You can do this on a number of different platforms. This is nothing earth-shattering here. But all I like to do when I have a system in place that outlines the setup for me before I even get in, that does a lot of the hard lifting for me. Let's just take a look at this trade on Google. Okay, I'm currently short on Google. Okay, got into this trade here this morning. Once I get in, all I do is I mark my stop levels, my targets, with horizontal lines. And then I format those horizontal lines, and I put alerts on them. I will either have my alerts sent to my computer. If I happen to be in the office for the day, I just might not be looking at the screen. I'll have the alerts sent to my computer. If I'm out of the office, if I'm out at lunch, I've traded from the golf course, I've traded from the road, if I'm traveling, I'll have the alerts sent to my cell phone. So if I come in next week and I start to hit these targets on Google, if we open up lower on Monday of next week and I hit a target on Google, that alert's going to be sent to my cell phone. So if I'm out of the office, if you're a smartphone user, a lot of brokers have mobile platforms. All I have to do is log into my mobile platform and place or manage the trade accordingly. Okay, that gives me incredible flexibility. Okay, it allows me to get on with my life so I'm not spending hours and hours on end analyzing charts. Okay, so for Monday morning, I'm currently long some Google puts here. Okay, I came in at the end of the day, I see that, I've started to approach my first target. My stop has moved down. Not a problem. We move my alert line down. So now for Monday morning, all of my research is done on Google. There's nothing for me to do here. I have my targets marked. I have my stop marked. And all I have to do is manage that trade accordingly. Okay, so in less than a minute, I'm already good to go for Monday morning on Google. Okay, does that appeal to anybody? I mean, that's the great part about swing trading. Okay, that's why we really preach lifestyle trading at NetPicks. Get in and out as quick as possible, book some profit, and move on with your life. And it really prevents you from overtrading. This is something that I struggled with quite a bit early on in my career. I just found that I was tracking so many names. I was trying to day trade, swing trade. I was trying to do it all. And I was over managing the trades. I was placing too many trades, and it was very overwhelming. I did not see the consistency that I was looking for. Okay, by taking this type of an approach, taking a very simple approach, looking for a few trades each week, gosh, it was amazing to see how much I improved as a trader. Okay, the less amount of time you can spend in front of the screen, the better. What I have found in my experience, when you stare at the charts all day long, staring at every tick, you're going to start to see things that might not necessarily be there. Why does that happen? Well, it's human instinct. Okay, if you're in a trade, the minute you go into profit, it's automatic. You want to lock in that profit as soon as you can. You want to get out. You want to look for every reason to get out instead of trusting your trade plan. So for me, by setting my alert lines on my stop and my targets, like I did on Google, it's almost a set it and forget it approach. I can move on, not have to stress out about it. I know that on Google, I win at a minimum 65% of the time. So I fully realize that 3 or 4 times out of 10, I'm going to lose. I'm okay with that. Because I know the way my system is set up, if I'm winning 65% of the time with my reward to risk ratio, I'm going to make money. Okay, so very powerful. I know it seems very basic here, but I can't stress how important this is and how big of a factor it was in my own trading. Okay, so with that being said, I just want to go ahead and walk you guys through some of the criteria that I look for in my own trading. Okay, now I could talk to you about vertical spreads. I could talk to you about ratio spreads. I could talk to you about a lot of different advanced techniques. Okay, there's a lot of great ways that you can utilize options. Okay, I'm going to talk about the most basic strategy here tonight. Just to prove that with the very basic strategies, you can make incredible money. Okay, a lot of times traders want to complicate things. They want to trade the advanced strategies because they believe that that's what they have to do to be successful, and it's not the case. So we're going to talk about just going long individual calls and puts. And I'll walk you through the criteria that I use. So I'm going to make the assumption here that you're familiar with how options work. Okay, you're familiar with a call option, you're familiar with a put option. I don't have time to get into the nuts and bolts of how those work. So hopefully you all have a basic understanding of how those products do work. Okay, so if we're going to go long a call, okay, we get a bullish setup on the chart, your system's telling you to go long, you want to buy a call option to benefit from that. What criteria do I look for? Well, let's start going through these one by one. Step number 1, wait for your system to produce a valid setup that fits your trade plan. Again, you guys might be looking at me saying, Mike, that's pretty basic. All right, that shouldn't even need to be on your trade plan. I mean, that should go without saying. The problem that I see with a lot of traders is instead of waiting for that setup, they want to try to front run their system. They want to try to anticipate things. For me personally, like I said earlier, I believe the market's going to go down for the next big move. Okay, that doesn't mean I'm going in and I'm loading up my portfolio with put options, because the market has not rolled over yet. Okay, I have some short setups on individual names like Google, for example, and I took those trades. But on other markets that haven't rolled over yet, just because I think the market's going to go down does not mean I front run my system. I talked to so many traders that try to do that, and it's a big mistake. All right, so step number 2, make sure the options on your stock have an open interest of at least 30 times the number of contracts that you're looking to trade. Ideally, I'd like this number to be even higher. Okay, so if you're looking to trade a 10 lot, you want to make sure you have 300 contracts of open interest on that specific option, that specific strike price that you're looking to trade. Okay, we're just trying to build in some rules here to make sure you're getting good fills. Okay, step number 3, make sure you have target points and exit points before entering the position. Okay, I've already shown you on the chart here a couple of times how everything's laid out for me beforehand. Once I get into the trade, I already know. Again, it's that human instinct. Once you get into the trade, your brain starts to play games with you. You start to see things that aren't necessarily there. You start to panic if it goes against you. Once you go into profit, you want to get out. So before you even put your money on the line, you need to make sure you have a roadmap that you can follow. Very key there. Step number 4, you need to form an opinion on how long you feel the move in the stock is going to take. Okay, we talked about doing some back testing earlier. Okay, this is extremely key. All right, you want to know the names that you're trading, and here's why. Because when I go to look at what option I'm going to trade, well, step number 5, I need to make sure I have twice the amount of time that I expect to be in the position left before expiration. All right, so on Apple, my average holding time is 3 to 5 days. I need to make sure I have 6 to 10 days left before expiration. It builds in a little bit of a cushion for myself. Okay, so now based off of that information, if I anticipate being in the trade for a week or less, I can get away with the at-the-money options. Now, some of you experienced options traders might be hearing that and saying, I've always been taught to stay away from the at-the-money strikes. Okay, the at-the-money options, those are pretty risky. And it's true. There's a lot of factors working against those options. Most importantly, the theta, that time decay, is highest at the money. Okay, but the reason we're able to get away with that is because our holding time is so quick. If we anticipate being in only for a few days, well, the theta, it's not really going to come up and affect us too much. Okay, there's a lot of benefits to those at the monies as well. For a very quick trade, you can take advantage of the gamma. So for those of you options traders that are familiar with the Greeks, you can take advantage of that gamma with the at the money options. Okay, your second option here is to go with an option with a delta of in between 0.6 and 0.65. This is typically 1 to 2 strikes in the money. This is my sweet spot. If I were to go back and look at a log of all my trades over the past 10 years, most of my trades fall in between 0.6 and 0.65 in regards to delta. Okay, so if you anticipate being in the trade for 1 to 3 weeks, I really encourage you to go in the money. Look for that sweet spot. Okay, I really think you're going to like the results that you see if you look for that. Now, if you're looking for a longer holding time, more than a month, I like to go at least 2 strikes in the money. My sweet spot there is with a delta of 0.7 to 0.75. Okay, the further in the money that you go, you start to reduce the effect of the theta. It really starts to put the odds in your favor. So for me, my sweet spot, again, between 0.6 and 0.65 on the delta. All right, now I can take everything that I just talked about on the call side, and it's very similar on the put side. Okay, so we're waiting for the system to produce a valid setup. We're making sure we have plenty of open interest, and we're making sure we're trading liquid options. We're making sure we have target points and exit points before entering the position. Okay, we want to have an opinion on how long we anticipate the trade taking. And then based on that, we're either going with the at the money strike, or we're looking 1 to 2 strikes in the money, ideally looking for that delta in between negative 0.6 and negative 0.65. Okay, pretty simple, right? Well, what types of returns can you see? I posed the question to you earlier. Are 100% returns possible? Well, let's take a look. Let's just take a look at some recent trades. Now, I'm not going back months on end trying to find the best trades to show you guys. Okay, I'm just going to show you some of the most recent trades that I have closed. Okay, so as long as we're on Google here, why don't we just focus on the last trade that I closed? I'm currently short here, which I talked about earlier. The last trade that I closed was back towards the end of February. Okay, the setup actually came on the 27th. We didn't trigger in until the 28th, but you can see here, everything was documented for me before I even got into the trade. Okay, I knew exactly where I was getting in. I knew exactly where my first and second targets were at. I knew where my stop was at. Now, what I'm looking at here is with the NetPicks systems, we like to utilize range charts. Okay, for those of you that are not familiar with a range chart, if I take a step back, and if I take a look at a daily chart or a 60-minute chart, for example, those time-based charts, those are forced to print bars or candles based on a set amount of time. So every day, regardless of what that stock does, it's forced to print a candle. So Google could move up or down $20, or it could move up or down $2. It does not matter. It's still forced to print a bar or a candle based on a set amount of time. Okay, the problem with that is when the market starts to slow down, starts to get choppy, because it's a time-based chart, it's still forced to print candles. It's forced to print bars based on that set amount of time. Really can cause you to get caught up in choppy conditions. Well, instead of that approach, I'm looking at a type of a range chart here. It's actually a momentum chart in TradeStation, and I have it set to 6.72. You can see it up in the upper left-hand corner. And what that's saying is that instead of printing a bar or a candle based on a set amount of time, it's not going to print a bar or a candle until Google moves $6.72. Okay, so what that does is it really filters out a lot of choppy conditions. Because if Google's not moving, it's not printing candles, it's not printing bars. So on very active days, I could have 3 or 4 candles. Okay, on slower days, I might have 1 or 2 candles. It all depends on how active the market is. It's a really good filter for this style of trading. Okay, so based on Google, using a range chart of 6.72, okay, I had this long setup. Instead of buying Google here, my entry point was at 804.55, which you can see over in the data window on the left-hand side. Okay, how many retail traders in the room have the account size large enough to put on a sizable position on an $800 stock? Nope, probably not many of us. But what we can do is we can go in and buy the options. So in this case, instead of buying the stock, I bought the March 7.95 call for $17.20. Okay, so for one full-size contract, I'm paying just over $1,700 to control 100 shares of Google stock at $795 a share. Okay, I came in on March 5, actually hit the full target. Now, along the way here, you can see that my system, once I start to approach my first target, it's automatically updating my stop. Okay, so I'm programming in my trade plan to make life very easy for myself. Okay, once I hit that first target, could you exit part of your position there if you're trading multiple contracts? You could. I do that all the time. I scale out of positions on a very regular basis. Okay, in this case, I came in on the 5th. I sold out my position. I sold out my calls for $38 a contract. Okay, that gave me just under $2,100 of profit. That's 120% return. You know, how many of you would be happy with 120% return in just a handful of days? Okay, I'm thrilled with that type of trade. Now, you might be looking at that chart saying, well, why did you get out of the second target? You could have caught another $20 on the upside. I'm not looking to capture tops and bottoms. I don't know too many traders that are able to do that successfully. What I'm trying to do is use a system that's proven to work 65% of the time, and I'm looking to capture very small slices of the overall price action. Okay, I didn't catch the bottom here. I didn't catch the top. I caught the middle section, and I still saw a 120% return. Okay, that's pretty powerful. Now, some of you might be looking at that saying, okay, that's still $1,720 per contract. That's pretty rich for my overall account size. Well, now you have the luxury of the mini options. Okay, so if you came in and looked at the mini option, okay, now all of a sudden that $7.95 call gives you control of 10 shares instead of 100 shares. Well, now you're able to get in for $170. Okay, now all of a sudden that trade's available to everybody regardless of your account size. Okay, that's pretty good flexibility there. Okay, let's take a look at another one. Let's take a look at Visa. Okay, Visa over the past week or so has been phenomenal. I don't know if any of you have been looking at this stock, but it's been great here on the upside. And I actually missed a couple of trades that did not meet my trade plan criteria. Okay, if I go back to this trade here on the 22nd, okay, I did not take that trade. Didn't meet my criteria. I did take the trade on the 25th, okay, and that was my full winner. Okay, we're actually working on another winning trade up here that's currently in progress. Again, didn't fit my criteria. Didn't take it. Okay, so I'm missing out on another winner, but I did capture this full winner on the 25th. Okay, so I came in, my system gave me my entry point, 163.44. I had my first target at 165.34, my second target at 166.57, and my stop was down just below the 161 level. Okay, so instead of buying the stock, I went in and I bought the April 160 call for $4.90. Okay, so $490 per contract gives me control of 100 shares of Visa. Okay, so it gives me control of 100 shares of $160 stock for just under $500. That's that incredible leverage that we talked about earlier. In this case, it actually moved quicker than I expected. Okay, I actually got in on the afternoon of the 25th. The very next morning, I'm out with a full target. Very quick trade. I sold out my position for $7.65. That's $275 worth of profit. That's a 56% return in less than 24 hours. Okay, you can't beat that type of a trade. Okay, now remember what I said earlier. I'm looking at these charts less than 20 minutes a day. So in less than 20 minutes a day, I just showed you two of my most recent trades that I've closed, a 56% return and a 120% return. Okay, how many of you would love to have those profits in 20 minutes a day? Okay, in fact, my options trading has far outperformed my day trading over the past month or so in a fraction of the amount of time. So it's a really cool feature to have as a part of your trade plan. Let me just look at one more quick one here because I want to take a look at an ETF. And I want to take a look at, and this is the China ETF. It's been one of my favorite markets to trade really over the past, I would say, 8 months or so. Just got a lot of great quick movement. So in this case on FXI, I'm looking at a range chart of 35 cents. So every time FXI moves 35 cents, it's printing a bar. Okay, filters out a lot of the chop. So in this case, this is a trade back on the 14th. This is the last trade that I closed here on FXI. System had an entry point at 37.26. Instead of shorting FXI, we all know how expensive shorting stocks can be. Just ties up a lot of your capital. Not saying you can't be successful with it, but I just don't understand why you would tie up all that capital when you can just go ahead and buy a put option. Okay, so in this case, I bought the April 38 put, $1.34, so $134 per contract. Gave me control of 100 shares of FXI. Okay, I sold it out on the 19th, so I held this for 5 days. Sold it out for $1.88, gave me $54 worth of profit. That's a 40% return. Some of you might be looking at that saying, okay, $50 in 5 days. Come on, Mike, that doesn't sound very impressive, but you only put $134 at risk here. Okay, a lot of you can put on a 10 lot and still get in for less than $1,500. Now all of a sudden you're looking at over $500 worth of profit in 5 days. Well, that's incredible levers. Those are incredible results. So I'm just showing you a whole series of recent trades that I've closed. Less than 20 minutes a day. This is just a great way to trade. So whether you're using a system like the NetPicks systems, if you're using some of the approaches that Steve talks about in his rooms, there's some great money to be made in the world of options. Okay, let's just take a look at a quick trade setting up for Monday. All right, let's take a look at Apple. This setup actually just printed at the close here today. So this one is setting up for Monday. All right, so as you can see, my system, it's printing these setups in real time. Okay, there's no going back and looking at what ifs, looking at coulda, shoulda, woulda. You know, hindsight's always 20/20. It's always easy to go back in time and pick out the great full winners and just focus on those. But in this case, we're just going to take a look at a trade that's setting up for Monday. Okay, so on Apple, my system's telling me to get short at 435.24. Okay, I didn't front run this setup here today. Okay, I still think the market's going to roll over here in the next couple of weeks. I really like Apple on the downside if it does so. Okay, but I have to wait for that 435.24 level to be hit. Now, what type of a position am I going to put on here? Okay, I already know where my targets and my stop are going to be, so what that allows me to do is really focus in on selecting the correct option strategy. So let me just pull up Thinkorswim. That's one of my preferred brokers here. I've pulled up Apple. To keep things simple, I am just going to look at the April puts, and we're going to look at a standard size contract. And in fact, why don't I open up the mini contracts as well, just so you can kind of get a feel for how these work also. So on the April options, I have 22 days left till expiration. I already mentioned earlier my average holding time on Apple is 3 to 5 days. So I have plenty of time left before expiration. Now, your first step is to identify the at-the-money strike. Well, if my entry point is down near the 435 level, that 435 strike put is going to be my at-the-money strike. Okay, by the time I hit my entry point, it's going to have a delta darn near close to negative 0.50. Okay, so that's option number one. You can go ahead and purchase the at-the-money strike. If the market's still moving somewhat slow early next week, if you wanted to play it a little bit more on the conservative side, you could go in the money. Okay, you could look at the 440 put or even the 445 put. Let's take a look at the 445 put. Okay, that's going to be 2 strikes in the money at that point. Okay, those are going to be the 440 put and the 445 put most likely will give you that delta in that sweet spot that I talked about earlier, negative 0.6 to negative 0.65. As you can see here, open interest, we're looking for 30 times the number of contracts we're looking to trade. Plenty of open interest here. Apple's probably the most popular traded product in the world at this point. So not an issue there. So we're looking at those strikes. So if we would have purchased the 445 put, for example, right at the close here today, you're looking at a total cost of $1,270. Okay, for one standard contract. Okay, let's look at the mini-size contracts. Okay, now we're looking at the same strike price. Now all of a sudden my cost is $132. Okay, so now all of a sudden you're controlling a $440 stock for $130. Okay, that's a very useful strategy to have in place for yourself. It's a very good use of your capital as a retail trader. Nothing says you can't go in and trade multiple mini contracts. Let's say you don't want the full risk of a full-size contract. Go in and trade 3 or 4 mini-size contracts. Okay, that's something that for those of you that are newer to the options world, it's definitely a style of trading that you really need to consider. Okay, so that's a trade setting up on Apple that I'll be watching here first thing on Monday. Okay. So before I jump over to questions, let me quick go back to my presentation here. And as my way of saying thank you for joining us here tonight, I just wanted to give you some freebies just for you to take a look at here over the weekend and into next week. So for those of you that are interested in the names that I like to trade on a daily basis, like I mentioned earlier, I trade the same stocks day in and day out. Well, if you click on this link, www.netpicks.com/optionsfree, it'll give you my very favorite names to trade. Okay. If you're interested in how we trade live, okay, it's one thing to come into a webinar like this and again, look at historical results, have the benefit of hindsight and say, I should have done this or I should have done that. It's a whole nother game to come in and watch us trade live. Okay. If you visit this link, this netpicks.com/free trial, I'll give you 1 week free in our live signal service room. You'll be able to log into the room, see what we're doing live in real time. Okay, so I hope to see a number of you in that room here over the next couple of weeks. Really start to, feel free to grill us with questions on how we manage these markets on a daily basis. So I'll leave those links up on the screen here while I get over to questions, and feel free to visit those links and take advantage of the free offers there. I'm not asking for a commitment there. I'm not asking for any type of monetary commitment. That is totally free of charge there. Okay. All right. Thank you, Tom, for putting those into the text. Frank, yeah, the mini options just came out here recently. I believe it's been 2 weeks now that they've been available, and they're only available on 5 names. Let me go ahead and type those symbols into the text here. We're looking at Apple, Google, Amazon, GLD, and SPY. Okay, so we might have to give it some time here for the volumes to really pick up. I've been impressed with what I've seen over the past couple of weeks, but it's a very useful new tool for you to consider. Okay, now if I've missed your question from earlier, I apologize for that. Just go ahead and repost it. I don't want to miss anybody's questions here, so I'm just going to start working through them. And again, for those of you asking about the mini options, again, all the basics of options trading stay the same, but instead of controlling 100 shares of stock, the mini options give you control of 10 shares of stock. So you're getting in at a fraction of the cost. All right, question coming in on at-the-money options. That's correct. An at-the-money option is when the option strike price is close or near the current price of the underlying stock. Okay, so if I go back to, let me just bring up Thinkorswim here. Close out the minis. If I look at the April options, if we want to find the at-the-money put, notice here how the current stock price is right in between 2 strike prices. Okay, what we would normally do is come in and find the strike price that is closest to the current equity price. In this case, it splits 2 of them. Okay, we've got 2 different options here. We've got the 440 and the 445. Okay. And David K. just posting on how powerful candlesticks are. I agree. I listened to Steve here earlier on a webinar, and there's some great potential there. Okay, there's so many ways to dissect the markets. Okay, that's the great part about it. Okay, so, like I said earlier, the system that I showed is just a different way of approaching the market. Okay, and again, it's not the end-all be-all. It really does not matter to me what system you use. The whole point that I want you to walk away with here tonight is the fact that you need to have a trade plan in place. You need to have those very specific rules in place before you even get into a trade. Okay, that's really our mission at NetPicks. It's been so for a number of years now, really pounding that point home because we see so many traders struggle with not trading with a trade plan. Karen asking how you determine the size of the range bar. It's actually a calculation that we take at the end of every month. Okay, and we train that inside of the Premier Trader University, which is university at NetPicks, runs ongoing. And basically, we take a calculation using the average true range, and we take that and we analyze it at the end of every month. So what I did for March is I came at the end of February, I came in, took a very simple calculation, and I've been using this range setting on Apple, 6.38 for the whole month of March. Once we reach the end of March, I come in, I set up my charts for April, and I trade the range for the same range for April based on a calculation of the average true range. All right, so a lot of questions on mini contracts. Hopefully I've covered all of those at this point. If you continue to have questions on those, just repost them here. There's a lot of questions from earlier that I'm trying to get to. The charts that I was showing earlier, I use TradeStation for my charting. I also use Thinkorswim for my broker. So just a combination there. My indicators that I use with the NetPicks systems, they are not programmed for Thinkorswim. Just a comment on weekly options and time decay. Yeah, that's the trade-off there. Okay, the time decay does add up quickly. Okay, the trade-off is you're able to get in at a lower cost. Okay, the only time you're going to use a weekly option is if you're anticipating a very quick move in the stock, which with a lot of my trade plans, I'm looking to be in and out in just a few days. So those weekly options work really nicely because I can lower my cost basis. And the indicators that I have shown, they are proprietary to NetPicks. Those are not your standard indicators on the platform. So if you're interested more in our indicators, go ahead and sign up for that free trial to our Signal Service Room, and we'd be happy to dive into more detail on the specifics on those indicators here over the next couple of weeks. And questions coming in, can you use candlestick signals on a 5 or 10 minute chart? You know what? You can trade options on any time frame that you can imagine. Okay, as long as you have a system that puts the odds in your favor, you can apply these option strategies on the NetPicks systems, on Steve's candlestick systems. It does not matter. That's the great part about options. That's what I was trying to preach earlier. You learn these strategies one time, and you can use them on any stock, any time frame that you'd like. It's a very powerful tool to add to your trading. A question on how I manage my trades. How do I prevent from getting out early? You know what? There's times where I do get out early. Okay? But I build my trade plans off of historical results. So what I'm doing is I'm trying to put the odds in my favor, and I'm saying, okay, based on the past 20 trades that I've taken, this is the best way of managing those trades. So I'm going to move my stop accordingly based on past results. Okay, if I get out early, doesn't bother me. I move on to the next trade. If I get out of a long trade early, doesn't bother me. I'll just wait for the next setup. questions on how do you set up your thinkorswim charts for your free trial. Again, you're going to have to, our indicators that we use are proprietary in NetPicks, so you won't be able to load up the indicators on your charts, but we do, our live signal service room does utilize Omnovia, so you'll be able to look at our charts in real time, look at all the indicators, and look at exactly what we're looking at. And if you guys have any questions at all on anything that I've covered and you would like to send me an email, be happy to share my email address here, and feel free to shoot me an email with any questions that you might have. All right, great question here. Is your service a give me a fish product or teach me to fish program? You know what? That's the great part about what we do at NetPicks. Okay, we want to teach you how to become a trader. Okay, it's not my goal to just sell you a system and sell you a method for trading and then move on to the next customer. What we do with our university is we take you through step by step everything that you'll need to know to become a successful trader. We're going to walk you through how to create a trade plan, how to come up with those rules so that going forward, you don't have to rely on us. You don't have to worry about buying every trade plan from us. That's not what we're looking to do. We want to empower you to take control of your trading. All right, how does your momentum bars different for each stock? Yeah, they are different. We're using the average true range indicator. So obviously it's going to be different depending on the price of your stock. And again, that'll change every month. So we're really trying to use a dynamic system. We're really trying to stay in tune with the current market conditions. If I use the same range setting on Apple, for example, if I'm using the same range setting now that I used back in 2011, it's not going to work. The market conditions are very different. So we try to stay in tune with the current market conditions on a monthly basis. That's the great part about the system. If I'm trading the weekly options, I like to go with the in-the-money options. Like I said earlier, my sweet spot personally is that delta in between 0.6 and 0.65. Okay, that's really how I like to trade. That's where I see the best success. That's where I'm comfortable with. And the dots on the chart, basically what we're doing is we're taking the overall range that we're using. So, for example, on Apple, if I'm using a current range of 6.38, my targets and my stops are they're going to be multiples of my overall range that I'm using. Okay, and we walk through all the formulas used there inside of the university. So everything is fine-tuned to the current market conditions. Okay, so if I've missed your question, go ahead and retype it in. There was a lot of questions coming in. Hopefully I've covered a lot of them. I'll give it a few more minutes here. See if anything else comes in. Bill, what do you charge? We have a few different products available. I'm not here to sell you anything here tonight. What I'd rather have you do is to visit us with the free trial here over the next couple of weeks, or send me an email. I'd be happy to work with you offline. But I don't want to turn this into a sales presentation. This is purely meant to be educational here tonight. I know how annoying that gets when you log into a webinar and everybody's just pushing products down your throat. So really trying to avoid that type of a setting here tonight. And I agree, Steve. I fully realize that there's some of you that might be interested. Just send me an email. I'd love to work with you one-on-one, see what we can do for you. I will be around here over the next couple of days, so I'll be happy to answer through email or through a phone call, and we can work through the details on what we have to offer. You know what, Sam? I'm not. And you know what? That's the way most people are at NetPicks. We're not salesmen, we're full-time traders. Okay, a lot of companies will just go ahead and put on a salesperson to try to just bring on as many new people as possible. Hopefully you could tell from my presentation today, I'm not a trained salesman by any means. I'm a full-time trader looking to work with traders that want to become successful. Okay, so am I the most elegant speaker in the world? No, that's not my goal. My goal is to make you a successful trader. And Steve, it's great. You know, I can't tell you how important that is for me. I don't always have hours on end to spend in front of the computer. So taking and managing these trades in 20 minutes or less a day, it's very powerful. I can tell you inside of Thinkorswim, they're very limited on the types of range charts that they offer. Okay, it's in there. It's under the Style tab.
All right, Mike, excellent job. And this is the type of thing we like to show on the Candlestick Forum. This is great information. I've always get questioned, why do you bring other people on if you think your trading system is the best? It's because my trading system is great for some people, but there's other people have other different, mental processes that if they see other trading techniques, they can combine them and make them into their own good techniques. So that's why we like to bring on people like Mike that has a system. I think candlesticks are great, but I think if you figure out your own program and take a look at different training programs, you're going to combine to what is comfortable for you. So, Mike, thank you very much. We got a lot of good information tonight, and I appreciate you being here, especially on a Thursday night right before a 3-day holiday.
Well, thank you, Steve. Thank you for the opportunity to speak here tonight. I enjoyed the questions, everybody. Hopefully you got some good nuggets to take away for the weekend. Enjoy your long weekend, and happy trading here next week.
All right, thank you. And so if it's a free trial, try it. You might pick up something and figure out that's the trading system that works the best for you. And hopefully when you apply candlesticks on top of it, it makes you that much of a better trader. So everybody have a good weekend. We will see you here bright and early on Monday morning with all sorts of clever ideas. Have a good weekend. And Mike, again, thank you very much for a great presentation.